If you're looking to invest into a syndication, kind of what, as the investor, should be your main focus when you're doing your own due diligence? So Chris, Musa, either one of you guys?
The operator. It's 100% the operator. The operator first, deal second. And you have to always look at it in that order, because a good operator can take a mediocre deal and do pretty well with it. A bad operator can take an excellent deal and lose all your money. So absolutely, quality operators. Really, I mean, every deal has risk. Every opportunity has risk. But ultimately, if you've got an operator that has a successful track record, let's be completely transparent here. Anybody who just got started in real estate within the last 10 years, we don't really know a rainy day. Like, it's been a good run. I'm in that boat. Not sure about them too, but I'm in that boat. Now, I have an experience. I've flipped around 200 houses, so I have seen business plans and executed and gone through the full motions on them. That's given me some experience. From an economic cycle, I pull on people who have that experience, whether it's third-party advisors or other folks, operators that we collaborate with, and then just data in general. And then, of course, you've got various risk management protocols that you can put in place. But ultimately, operator first, deal second.
Yeah, I think that's pretty fair and well said. I think, maybe the underlying thesis around all of this really comes down to, how do they make their money? Are they selling you a dream, or are they selling you a partnership, a true partnership, right? And this is where, again, we have our own skin in the game. So if you fail, we fail, right? And that's how we get paid. Yes, we have some fees up front to make sure we can cover the bills and keep the lights on, but the engine is running, and we make our money mostly if the deal is successful. And if it's not successful, then we lose out a lot. We have, this is probably not new to any of you, the whole preferred return or so on. So ultimately, if you don't make at least a minimum of X%, we don't get paid anything. So there's aligned incentives at the end of the day. But maybe to kind of build on Chris's point, for those who know us, you may know that we have a partnership with Open Door Capital. For those who don't know, Bigger Pockets, I'm sure you guys have heard of them, largest real estate education platform in the world, right? The face of that company is a gentleman named Brandon Turner. Maybe you've heard of him. We have a partnership with them. And where that came about is Open Door Capital, they focus on mobile home parks. That's their investment arm. They've done a really good job of that. The challenge that they run into now is that there's not a lot of mobile home parks that exist in the country that they haven't really tapped into that meet their criteria. And frankly, most states, most cities, they're not issuing more permits to build more mobile home parks. And for most places, they kind of see mobile home parks as an eyesore versus they would rather have an A-class office building or a multifamily complex, something that's ultimately going to bring some sort of economic development to the area. So what Open Door Capital has done, they decided that they want to keep growing and expand into multifamily properties, but they don't have the resources, the relationships, the connections to do all that, the processes. So they figured, let's just find the right partner to work with. Now, from that, with the platform of Bigger Pockets, they have access to pretty much every operator in the country, quite literally. But they went on a whole due diligence process, talked to as many as they could get their hands on, and determined who is the right partner. The three variables they were focusing on were, number one, who has a track record of success. I think that's pretty much a no-brainer that has to be there. Number two is the ethics of the person have to be there. And this kind of goes to the operator piece, because ultimately, no matter how good the numbers may look that are your pitched, if you don't trust the person who's giving you the numbers, then you should probably think twice about giving them your money, right? I think it's a no-brainer again, but it's pretty amazing what you see out there. And then number three, of course, is the ability to scale into the future. If they've had one or two home runs in the past, cool, but can they do that consistently in the future? So those are three metrics that they focused on, and from their due diligence, they narrowed it down to really two people in the entire country they're willing to work with, and we are the primary chosen horse. And I think there's a reason for that. And obviously I'm a little biased here, but I don't think you necessarily get to raise and deploy $200 million of other people's capital without something to back that up, from a track record perspective.